Hello again, traders. Doing job there from Drfx, swing trading mentoring. Taking a look first of all at the Euro Aussie dollar, which I think, based on what I'm seeing on a daily chart, could actually be forming a large consolidation setup over the next several months. So what we have here is that the market has given us this sharp bearish wave and is now giving us a bullish wave that is a little bit more volatile, with this pause that took place here that led to the formation of this consolidation setup. So I think that following this false breakup reversal that took us back inside of consolidation and back at the resistance boundary, this could eventually lead to the continuation of the movement bullish as it continues the formation of these additional bearish and bullish waves. Now, taking a closer look, yesterday I had mentioned that the market, even though this is a possibility that I'm now considering, it is actually still possible that instead of breaking out, the market could actually head back inside of the consolidation. So even though in most cases when we have false breakout reversals that take us from one end of the consolidation to the other and then breaks out, in most cases, there are times when the market will head back inside of the consolidation and back towards the support boundary. So these possibilities are still to be contemplated in terms of what could take place for this currency pair. Now, as you can see here, the market eventually provided us with this breakout candle. Combined with these two previous candles, it actually led to the formation of what we call a morning star formation. However, the size of this bull candle is not that strong enough, is not that large enough, even though it has cleared the resistance boundary, which is a very key element when it comes to identifying a possible breakout. The candle itself is not the strongest. So we would want something close in this size, which is similar in size to what actually started the reversal here. So this is actually not likely to actually lead to a breakout. And so what we would need for the market to provide us with is a stronger candle following this bear candle that could close the day today here, and then provide us with this bull candle. But right now, even though the market did in fact provide us with a U-turn and a breakout signal, the signal itself, the bull candle here, is not that strong. So given the weakness of this bull candle, it opens up the possibility that the market could actually be heading bearish. Now, as you can see here on the 4-hour chart, the market has been moving sideways and has actually waved bearish and then bullish in a slow pattern with these small candles, which are typical of what we see when the market can do one of two things. It can either pull back here, forming a double top formation that then leads to the movement back to support, or we could actually see the market move sideways and form a small consolidation setup here. So it will come down to support and then rally back and then continue to move, wave sideways, and form a consolidation setup here. So what could take place is that this sideways pattern that could be formed will then lead to either the bearish candlestick signal that indicates the return to the movement, the return back to support, or a breakout that leads to a stronger bull candle. So what takes place on the 4-hour chart in the short term or the next couple of hours is going to be determinant, is going to determine the direction of this currency pair over the next several days. Now, taking a look at the US Swiss franc, which as you can see was in a range consolidation setup. You can see that the market has in fact U-turned at the support boundary and has given us these two breakout candles to indicate the start of sharp movements and gains in favor of the Swiss franc. Now, as I've said before, I no longer trade breakouts. My focus is actually trading within these consolidation setups, as well as false breakout reversals, similar to the one that we got last week on the Euro Aussie dollar. But nevertheless, I'm going to be showing you how we would trade this if in fact this was something that I traded. Now, taking a closer look, you can see that the market has in fact provided us with two strong bearish candles as part of the breakout. So normally when I would trade these breakouts, this would be the green light to indicate the start of the movement bearish. So what could be done is then to go on the 4-hour chart and identify the setup and the signal to trade. Now you can see that the market broke bearish and provided us with a strong bearish signal on the 4-hour chart, which in fact led to this second candle here. Right? So this is a strong candle on the daily chart, and it's supported by a strong breakout signal on the 4-hour chart. So what we would do is to enter the market around about the current price, placing a stop loss above the high of this formation here. And then trading target would be either 100 pips if you want to trade, which could be hit within the next couple of days, or if you want to wait longer, target a 200 pip gain as part of the breakout. So this will take you to 0.9570, and the 100 pip target would be at 0.9670. So this is how I would trade it, assuming that the market is going to be breaking out aggressively bearish and continuing the breakout, continue to respond to this breakout that has started. Now in terms of the New Zealand Swiss franc, which could actually provide us with a formation of a consolidation set up on the daily chart, on the 4-hour chart here. This support point has already been formed along with this resistance point. So we're going to need the market to form additional support and resistance points that would allow us to complete the formation of the consolidation. So what could be taking place now is that the market could be forming a double bottom formation. It initially started a rally, and as I'd recall, and as you'd recall in the previous video, I had said that even though the market had started with this bullish movement, it did not provide us with a setup and a small enough stop loss that would provide us with a trading opportunity. So as you recall from that video, I had said that we wanted the market to pull back and then provide us with a signal bullish, which would then provide us with a low point that would act as our support point, where we would place our stop loss there, because the closest point would have been all the way down here, which would have been too large of a stop loss. So as you can see, in the absence of a setup as part of this movement, this was just ordinary single candles by themselves. In the absence of something like this, a pullback like this, then it reduces the chance that the market is actually going to continue. So it was no surprise that the market actually pulled back right now. So what could be taking place is that the market could be forming a double bottom formation that would then lead to the rally back towards this area here, where it would then form a second resistance point, and then U-turn to take us back down towards this area here, and complete the formation of the consolidation. Euro Canadian dollar, similar situation, but this time on the daily chart, and this could be forming a much larger consolidation. Right now the market has in fact rallied and has appeared to be forming the second support point. It has broken above this downtrend line here, but even though the market has started this rally, again, in the case as it was with the case of the previous currency that we looked at, we're going to need the market to pull back a little, which it is now doing, and then provide us with a bullish signal. So that would provide us with confirmation that the market is going to be continuing bullish, because these single candles here, in rare cases do you see the market continue all the way up to here, this distance, over 500 pips I believe this is, or close to 300 pips, 300 to 400 pips in distance with just single candles, especially if the setup that started the movement does not indicate that the market is going to be breaking out in terms of single candles. Breakouts that take place with single candles and no temporary pullbacks along the way, such as this, which is what we would need, those are usually started by setups, signals like double tops, double bottoms, ABC signals, as well as breakouts from small consolidation setups. Those are the typical signals that normally lead to the start of fast and aggressive movements, which would then lead to breakouts with just single candles. So in the absence of any of those at this area here, we will in fact need the market to pull back and then provide us with a signal. Moving on to the Australian Japanese yen, which has formed this large pennant setup on the daily chart, as you can see here. The market initially broke out below this area here, but we're now starting to see, well, not starting, we're seeing that the market has clearly rallied quite aggressively to indicate that we're no longer going to be breaking out. So this is one of the reasons why I no longer trade breakouts, because the market can start and appear to be beginning a sharp breakout, but then all of a sudden pull back and take us back towards the boundary of the consolidation setup itself, with the possibility of heading back inside of the consolidation. So what we could be seeing here is the gradual formation of an ABC signal. This would be the A, the B, the C, and we would need the market to provide us with a bull candle that closes above support to confirm the start of the reversal. So this is something that I think could be on the cards for this currency pair. If we continue to see the market, if we don't see any bearish movement to indicate a possible continuation of the breakout. So the longer it stays like this in this area here, I would think that the greater it is that we're going to be seeing the market provide us with a bull candle to start the reversal. Now, pound Aussie dollar. You'd recall that I thought that the market was changing from the possibility of forming a large consolidation to a smaller one in this region here. But what I'm seeing here now as possible is that we could still in fact be forming a large consolidation setup, and that this rally here led to the formation of this uptrend line, and then the sideways movement that has taken place right now could then lead to the formation of a bearish candlestick signal. So we would have an ABC signal, this being the A, the B here, and the C, and then the breakout candle to complete the formation. So if that is going to take place, which I think is possible, then the movement back towards this area here could be very fast, because ABC signals like this 1 2 3 1 2 3 type formations usually lead to fast and aggressive movements. So it would come down towards this area here just below the 1.73 level to hit the support point and then rally to form this bullish and bearish wave. So what we would do is wait until the market provides us with this candle here. Once it's strong enough on the daily chart, we would then go on the 4-hour chart and look for a setup to trade this movement back down to support. So that is what I'm seeing on the currency market right now. US Swiss franc would be a trading opportunity if I still included large breakouts as part of my trading strategy. But since I'm focused more on the short-term movements of 50 to 70 pips, I would not be trading that setup right now. But as you saw, that is how I would have traded, or that is how I would trade this setup, assuming that the market is going to continue bearish and provide me with strong trading gains from this setup. In terms of what I will be trading now, I'll be looking for the pound Aussie dollar to provide me with this bearish signal here. I think this is one of the currency pairs that is on the front burner in terms of opportunities. So we would have to wait until the end of the trading day tomorrow, at the end of the US trading session, to wait until the market provides us with this bear candle here. So between now and then, I'm not seeing anything as possible. There is a risky setup that could be provided by the Euro Japanese yen, which if we see a strong breakout bullish on the 4-hour chart, it could lead to or indicate that the market is going to be continuing bullish. So it's a risky setup because there have been several setups along the way that have been formed on the 4-hour chart. So nevertheless, I'm going to be pointing that out. Also, there's a possibility in terms of a setup on the Aussie US dollar, but I'm not very convinced, which is why I haven't put it in this presentation. But I'm going to take a look at it again and assess it but I think it needs to rally a little bit before it can provide us with a formation of a possible setup that we could actually trade. So as usual, if you have any questions, you can hit me up at this email here, shepherddoane@gmail.com, worldwide 876 on Twitter, and Drfx Trading on Facebook.